I just looked at the video that you guys are gonna hopefully be watching right now. It's about 10 minutes long. It's on a crowdfunding platform company called Arrived Homes. And in the video, I am calm and cool and collected. I'm not raising my voice, I'm not cursing, I'm not yelling, I'm not sending any kind of hate out to Arrived Homes. However, I might have been a little too calm in the video. These guys have really pissed me off. And that's why I'm making the video. It's rare that I sink my teeth into something negative like this and then talk about it. However, these guys have taken advantage of people. So far, from my calculations, they've made over $5 million in just fees from having these properties. No money out of their own pocket, no skin in the game. They made $5 million on 115,000 investors that invested anywhere from $100 to up to a couple $100,000. They provided information that was, let's just say, false, or at least based on past performance in the real estate market that is not realistic. The past 2 years with appreciation, they're going off of future gains based on the past 2 years, and that's not right. They're taking advantage of people. So watch the video. Tell me what you think at the end. Am I going overboard? Are they legit? Should somebody call somebody about it? Let me know. Hey out there in YouTube land, I hope you're having an amazing day. I'm coming to you live from my office. I've made about 400 videos. The majority of those videos are on real estate investing. Real estate investing, buying a property, putting some work into it, and holding it as an investment I don't want to sound too dramatic, it's changed my life. I was already a happy person before. Ask Diane, ask anybody. But now, with real estate investing, it's given me a new freedom. The money that it brings in, I don't know where else you can make that kind of money. And I've wanted to give it away to people. That's why I've made so many videos about it. Now, I don't think anybody's ever taken me up on it. No one's ever said, hey, Harry, I got this house down the street. Can you come and take a look at it? No one ever has. However, I still make the videos because if one person sees a video I make and says, you know what? I want to make a change in my life. Maybe real estate investing is the way to go. Then my job is done. I love it. Never tried to sell anybody anything. Out of all those 400, and I also have made videos about going down to the casino recently. They've been all of the videos because I can't find any properties in this market. And the videos for me going down to the casino, they're entertaining, and I'm glad that people like them. But the meat and potatoes of what I do is invest in real estate. Out of all those videos, I don't think I've ever said anything ill or bad or negative about a company. No, I don't think I have. Or a person. I don't have a lot of negativity in my life, my own life. It's not like I put my hand up when people are coming towards me and I'm like, oh, no, you're negative? You can't come into my world. It just doesn't happen that much anymore. I don't know how that happened. The point I'm making is, this video is a little different than those. I might seem critical of this particular company that I'm going to mention. And if I am, it's because, I guess you would say, a pet peeve of mine is when I see companies or people taking advantage of other people. It gets under my skin. So, who comes into mind a lot of times is big banks. Sometimes big banks, they rub me the wrong way about how they take advantage of people. But we're not going to go there. Today I'm going to tell you about a real estate crowdfunding site that has been soliciting my business for over a year now. I'm going to show you an email that I received from them, and then I'm going to show you their website, and I'm going to go into detail about why it might not be the best bet for everyone. Here's one of the more recent emails I received from Arrived Homes. It's a crowdfunding platform. And if it's not, if it's considered something else, and I apologize, but that's how I see it. It's a crowdfunding platform for real estate. October 18th, I got that. This is from Arrived Homes. This one's saying something about 4 new rental properties that are available to invest in. It gives you a little bit of statistics. It gives you a property equity returns, rental dividend yield, and hypothetical 1-year return of 13.1%, right? Well, I looked up Arrived Homes. After I got these for a while, I looked them up. They're primarily down in Tennessee, and I think they're also in a couple other states. Crowdfunding is where a crowd funds something. In this case, it's real estate. So Arrived goes out, it solicits investors to invest. You could buy shares as little as, I think, $100 worth of shares. So you don't have to be an accredited investor. An accredited investor, you have to provide some paperwork showing what your net worth is. More or less, an accredited investor, as far as the government and other agencies are considering you kind of savvy with investing. So you could take, like, I guess, a greater risk. In this particular case, I don't think you have to be accredited. Like Uncle Joe or Aunt Matilda could just send these guys a $100 check and they can get $100 worth of shares in their company. And their 3.2% dividend yield with a hypothetical 1-year return of 13%, that's kind of attractive, right? I looked up Arrived, and I got to be perfectly honest with you guys. When I looked up their reviews and some other things, I was a little jealous, envious actually. These guys can't get properties fast enough. Like, there's so many investors that want to invest in their company, they can't keep up with it, and they're just going out and getting new houses all the time. I've been doing this for a couple of years, and I've been pretty successful, and I have not found one Uncle Joe or Aunt Matilda that wants to invest in me. So I was a little like, my ego is bruised. What the heck do these guys? So what I did was I looked them up a little bit. I looked into it a little bit further. Let me show you. Now, I'm going to give Arrived Homes credit where credit is due. And their emails are professional. They grab your attention. These returns, especially in today's stock market, or where the stock market is today, I mean, this is some good stuff, right? So at the same time that it's attractive, it's also a little suspicious, cynical. I'm going to give you an example of one of their homes that they just recently got funded, the Englewood. They give you the on their behalf. I just want to let you know that they're pretty upfront about everything, and you don't have to really be a rocket scientist to look into everything here. I'm not going to go into detail, but I'm going to highlight some things. This is called the Englewood. They give you the address. You can look that up. They give you what the monthly rent is going to be, what they purchased the property for, how many investors they have, right? So they purchased this house for $679,000. The monthly rent is going to be almost $3,600. This says that this is available, but not for this property because it's already funded. It's not leased yet. It's marketed for rent. They're going to give you 3.2% a year dividend. And here's where their historical returns on hypotheticals come in. Hypothetical 1-year return of 14.9%. You're going to get 3.2% dividend yield. Equity returns 11.7%. It's all fantastic, right? Especially like what I said with this, where the stock market is today. I mean, who wouldn't want to invest in this house? You could send them in as little as $100. Now here's the offer in details, and they're pretty upfront. They probably have to be upfront. Right here. So they're purchasing it for $679. They have improvements and cash reserves. I'm going to go through this fast. You're more than welcome to go into arrivedhomes.com and just double check my numbers and what I'm saying, and you can look into it even a little bit more. So as you scroll over things, it pops up, right? So they bought it for $679,000. They have improvements and cash reserves, $35,000, closing costs, offering costs, etc., $31,000, sourcing fee, $35,000. So the property improvements and cash reserves probably is pretty legit. They're going to have cash reserves on the side in case something goes wrong with the property. I don't know how much improvements they're going to have to make on the property. It looks like it's almost new. Well, it's not new, but updated. The closing costs, offering costs, holding costs, and arrived sourcing fee, like, what do you got there? Like $66,000? It's kind of high. Here's where I have a problem. The total property amount of $781,000. That's $102,000 above the purchase price. So you got all these costs in here, right? The whole period is going to be 5 to 7 years. Arrived Homes says that they're going to get rid of the property in 5 to 7 years, and then they're going to just disperse the funds to the investors. Here's all the shares. The price per share is $10, so if you sent in $100, you'd have 10 shares. This quarterly fee is paid to them quarterly, obviously, $1,000. Now, putting $100,000 on top of the purchase price is a little scary in itself. However, we should probably dig just a little bit deeper to see what else is going on. Now, again,
Arrived Homes gives you the actual address of this particular property, which is nice. So as an investor, it's passive. You don't have to go in there and swing a hammer. You don't have to do anything in this property, and you still feel like it's yours, like it's tangible. So I see the rent of $35.95 and the purchase price. I want to just cross-reference it. I'm not in Memphis, but what can I do from New Jersey just to do a little bit of investigating is I could pull it up on Zillow. And there's yes, they're trying to rent it for what they said. There's the address and everything else. There's the purchase price that they bought it in July for what they said they bought it for, and it's on the market for $36.95. Looks pretty legit, right? And it is legit. However, 2 years ago, it was being rented out for over $1,000 less, $24.95. I got a little bit of a problem with that because at $36.95 now, it's already the top of the market, right? I don't think they're going to be able to get any increases in rent. All right, well, let's put that to the side right now. Let's look at this purchase price of $679. Now, where are we at in the real estate market right now? It's starting to slide. You don't have to be a heart surgeon or a rocket scientist. I only mention those guys because I think that they're really smart and they're doing some really smart stuff. So you don't have to be a rocket scientist to know that we are at the top value as far as real estate. And we don't know where it's going to go, but you could see that it's going to start sliding. Matter of fact, it started sliding already. So if they purchased a property for $679,000 at the top of the market, it might slide a little bit over the next couple of years. And I do not want to insinuate there's anything extra shady going on behind the scenes. However, on Zillow, and I'm not even saying that these are fair comparables down here for rent, but you can see that the rent is $1,000 less than what Arrived is asking for their particular house. The reason why I keep on coming back to the rent is, in order to come up with a 3.2% dividend yield, you got to have that much rent. If it was down at $2,600 or so, the dividend yield would be a lot lower. So they got to rent it out for that much. Are they going to be able to rent it out at $1,000 more than what comparables are? I don't know. We're going to have to wait and see. All right, so I'm back on this particular property I mentioned, the Englewood. And I just want to go down to where they have their hypothetical 1-year return. Their hypothetical 1-year return, and listen, if anybody from Arrived is watching this video and any of this, if I'm quoting wrong numbers or I'm giving wrong information or anything, please just put a comment down below or email me or comment or whatever. I don't want to make you guys sound bad, but the facts are the facts. 14.9% hypothetical 1-year return is based on the past 2 years' appreciation. We've had appreciation in this country double digit over the past 2 years. I mean, in some parts of the country, it went up 20% in a year. So coming up with 14.9% hypothetical 1-year return would make sense if you based it on the past 2 years in the real estate market. However, historically speaking, we're talking about 3 to 4% over the past, 50 years appreciation. So the 14.9% a year hypothetical 1-year return doesn't really sound good. So here's where I'm at with this. The $102,000 in fees, that adds up to $781,000. That's how much investors have into this property, $781,000. That's $102,000 more than what they purchased the property for at $679. At $679, the purchase price is probably at the top of the market, and I'm just going to estimate that it's possibly $50,000, $75,000, $100,000 more than where it's going to be in a year and a half or two. That represents between the costs that are put on top of the purchase price and the fact that the purchase price is inflated. Yeah, it's inflated. I don't mean to laugh. It just makes me a little frustrated to see these numbers. So you got a 30% negative equity
in this house. I don't think I'm really saying that right, negative equity. But you got to make up 30% before you start seeing any profits in the form of appreciation. So for Arrive to say that their exit strategies in 5 to 7 years to pay everybody back with a profit, it doesn't sound like it's going to happen. Is it impossible? I'm not going to say impossible, but it's virtually impossible. Here's my prediction on this particular property and Arrived Homes. They're going to run into some problems a couple of years from now. They're going to be able to still give their dividends 3% or so. But when they start trying to get out of properties in 5 to 7 years, purchasing properties like the way that they do, and tacking on those exorbitant fees, they're going to run into some problems. And that means you're going to run into some problems if you invest it. So if you send in $10,000, 5 to 7, and you expect that $10,000 plus a profit 5 to 7 years from now, I would imagine, I mean, we're going to have to look back at this video. I would imagine in the fine print, Arrived has, this isn't guaranteed, this money is at risk, yada, yada, yada. In 5 to 7 years, if you go to try to take your money out, they're going to say, hey, listen, you could keep your money in for another 5, 7, 27 years. And then we should be able to throw you a return, or you can take it out now at a loss. And that would stink. That would stink for Aunt Matilda, or Uncle Joe, who's not an accredited investor, that threw their money in here. Because if you know me, I'm a gambler. Throwing a couple $1,000s in and hoping that I make some money isn't that big of a deal to me. But just doing a little bit of research behind the scenes, it shows that this is not the best, in my opinion, way to go. I'm going to make another video on the opposite side of bad crowdfunding. I should make that within a day or two. And we'll show you what crowdfunding in real estate could really look like and how it could be positive and everything else.